Hello, my dear listeners, and welcome back to the Kapeel Gupta Career PodShow. And today, I want you to imagine a scene that looks very normal from the outside. A bank is giving loans, a company is borrowing money, a market is moving up and down, a startup is raising funds, a family is investing savings, a currency is reacting to global news, an interest rate changes, a stock falls, a borrower defaults, a fraud risk appears, a business suddenly realizes that one wrong financial decision can shake everything. Now, in that moment, the hero is not always the person closing the deal. Sometimes the hero is the person who quietly asks the smartest question in the room. What can go wrong? How likely is it? And how do we protect ourselves before it happens? Now, that person is a financial risk analyst. And what a fascinating career this is. Because a financial risk analyst is not just somebody who loves numbers. This is a professional who helps banks, financial institutions, companies, insurers, investors, and even regulators understand risk, measure it, and reduce damage before it becomes a crisis. So, if you're a student who likes finance, economics, analysis, data, problem solving, and structured thinking, this career can be one of the most exciting and future ready choices for you. So, let me put it very simply. In cricket, everyone notices the batter who scores runs. But very few notice the strategist who studies the weak areas, reads the pitch, predicts the pressure points, and prevents collapse. A financial risk analyst plays a similar role in the world of money. Now, they are not always the loudest person in the room, but they are often the reason the room is still standing. So, hi, I'm Kapeel Gupta, career coach, life mentor, graphotherapist, and founder of Study Abroad Academy. I help students, parents, and young professionals gain clarity, confidence, and direction in life and career through deep coaching, mindset transformation, and the powerful practice of graphotherapy. Because career success is not just about choosing the right course, it's about becoming the right person for the life you truly want to build. And now, let us begin with the first big question. What is the scope of this career in India and abroad? Now, the scope is strong, very strong. In India, the financial system is growing, becoming more digital, more complex, and more interconnected. Banking, insurance, NBFCs, fintech, wealth management, payments, digital lending, treasury, derivatives, and capital markets are all becoming more important. And as the system grows, the need to manage risk also grows. Think about it. The more money moves, the more risk moves with it. And that is why financial risk roles are becoming increasingly relevant in India. Banks need risk professionals, NBFCs need risk professionals, fintech companies need risk professionals, insurance firms need risk professionals, rating linked, treasury linked, compliance linked, and investment linked environments need risk professionals. Even consulting firms and regulators need people who understand how financial risk behaves. And this is not surprising at all. The Indian financial system is not only expanding, it's becoming smarter, faster, and more exposed to change. That means institutions cannot survive on instinct alone. They need professionals who can analyze market risk, credit risk, liquidity risk, operational risk, and emerging risk in a disciplined way. And this is why the career has strong relevance in India today. So, if a student asks me, can I build a serious long term career as a financial risk analyst in India? My answer is yes, absolutely. You may find opportunities in banks, private equity related finance teams, NBFCs, consulting firms, financial service companies, corporate treasury roles, insurance organizations, fintech platforms, credit institutions, asset management ecosystems, and risk modeling functions. Some roles are more technical, some are more strategic, and some are more reporting focused, and some are more policy and control oriented. But the need is real. And internationally, the scope becomes even broader. Globally, financial institutions face interest rate shifts, market volatility, liquidity concerns, geopolitical uncertainty, fraud risk, credit stress, model risk, and technology linked risk. That means risk professionals are needed not only in traditional banking, but also in asset management, global markets, treasury, consulting, central banking, and risk technology environments. And this is why the role of a financial risk analyst remains relevant across countries. In fact, the language of risk is universal. Now, whether you are in Mumbai, London, Singapore, Toronto, or New York, financial institutions all ask some version of the same question. What are our exposures? How do we measure them? And what happens if the worst case arrives? And that is exactly why financial risk analysts matter. And now, let us make the job feel more real. That what does a financial risk analyst actually do? So let us imagine a practical example. Suppose a bank is lending large amounts to different sectors. Some borrowers are strong, some are vulnerable, some may default if the economy slows. A financial risk analyst helps study the probability of that risk, assess how much loss the institution might face, monitor the exposure, build models or reports, and help decision makers stay prepared. Or suppose a company is exposed to foreign currencies, interest rate movements, or market volatility. Again, the financial risk analyst helps measure that exposure, run scenarios, stress test outcomes, and recommend controls or action. Or think of a fintech company giving digital credit quickly. Fast growth sounds exciting, but what if borrowers do not repay at expected levels? What if a fraud pattern appears? What if liquidity tightens? What if policy changes? Risk professionals help answer those questions before the headlines do. And that is why this job is not only about math, it's about judgment. A financial risk analyst studies how different risk types can affect performance, capital, profitability, stability, or decision making. Now, depending on the role, they may work on credit risk, market risk, operational risk, liquidity risk, model risk, enterprise risk, or a combination of these. On some days, they may work with data, models, dashboards, and scenario analysis. On other days, they may prepare reports, present findings, review exposures, challenge assumptions, or work with business teams. In some roles, they may help design limits and controls. In others, they may validate how risk is measured. In still others, they may support regulatory or internal risk frameworks. And that is what makes this career so interesting. It sits between analysis and decision making. It sits between finance and foresight. And it sits between business growth and business discipline. And let me tell you something important for Gen Z listeners. This is not a back office boring career, the way some people may wrongly assume. In a well run financial institution, risk management is core strategy. Because if the business grows without understanding its risk, that growth can become very expensive very quickly. In simple language, a financial risk analyst helps prevent smart people from doing financially stupid things. Let me say that again. A financial risk analyst helps prevent smart people from doing financially stupid things. So now, let us move to the educational route. How does someone become a financial risk analyst? Now, the truth is that there's no single one size fits all path, but there's some very strong roads. A common foundation comes from finance, economics, mathematics, statistics, accounting, business, commerce, engineering, or data oriented disciplines. What matters is that the student becomes strong in analytical reasoning and financial understanding. For many students, a bachelor's degree in commerce, economics, finance, business administration, statistics, mathematics, or engineering can be a starting point. And after that, some students move into master's programs, quantitative finance, economics, MBA finance, or specialized risk management training. Others build a career through industry certifications and work experience. And in this space, professional credentials matter too. With the most respected global names, here is the FRM, the Financial Risk Manager certification. It is offered by GARP, and is seen as one of the major credentials in the risk world. It covers risk foundations, quantitative analysis, markets, valuation and risk models, and later moves into market risk, credit risk, operational risk and resilience, liquidity and treasury risk, and investment risk. It is one of the clearest signals that this profession values serious technical preparation. So now, let us talk about universities and study pathways. In India, direct full degrees called financial risk analysis are not very common. They are very strong routes that can prepare students well. One such strong name is IIM Ahmedabad because its finance and accounting area explicitly offers programs in financial risk management and advanced program in quantitative finance and risk management. For a student who wants serious India based preparation linked to the financial system, that is a very relevant name. Another strong India route is Indian Statistical Institute because its MS in quantitative economics and related quantitative programs are deeply aligned with analytical careers. So, if you want to become someone who understands finance through strong quantitative thinking, that route can be powerful. So, in India, the path is often built through finance plus quantitative skill plus risk knowledge rather than a simple degree title alone. Abroad, there are several highly relevant pathways. Imperial College London offers an MSc in Risk Management and Financial Engineering, which is one of the clearest and most directly aligned master's programs for this field. It is quantitative, technical, and strongly designed for the finance industry. Oxford offers strong finance programs where risk management and financial crisis are part of the learning, especially in financial economics. Columbia also has highly relevant pathways in financial engineering and risk management. These names matter because financial risk is a field where strong quantitative education and strong market understanding are both valuable. Now, let us come to the skills. What kind of person does this career really suit? First, you need analytical thinking, not just school style calculation, but the ability to ask, what does this number mean? What happens if assumption change? What is the downside? Second, you need financial understanding. You must understand markets, lending, interest rates, balance sheets, macroeconomic factors, and the way financial institutions actually work. And third, you need quantitative ability. Depending on the role, you may need statistics, probability, modeling, scenario analysis, or data driven decision making. And fourth, you need communication skill. And this is very important. A financial risk analyst may find something important, but unless they explain it clearly to management or business teams, it may not influence decisions. And fifth, you need calmness under pressure. Why? Because risk becomes most important when the environment becomes uncertain. A nervous person who panics at every shock will struggle in this profession. The role needs clarity, discipline, and composure. And then there is one more thing: intellectual honesty. Because this profession is not about telling people only what they want to hear, it's about telling them what they need to know. Sometimes that means slowing excitement. Sometimes that means challenging assumptions. And sometimes that means saying, this growth looks good, but the exposure behind it is dangerous. Now, that courage is valuable. And now comes the money question. What does a financial risk analyst earn? In India, the salary can vary by city, employer, role type, and experience. But the current market pictures is encouraging. Recent salary estimates suggest that the average financial risk analyst salary in India is around 11 lakhs per year, with a broad range depending on the employer and experience. Entry level roles may begin lower, while stronger specialist roles, metro market positions, consulting roles, and international firms can move significantly higher. For related roles like risk analyst in places like New Delhi or Gurugram, the averages are lower than the most specialized financial risk analyst title, which is important for students to understand. General risk analyst roles and most specialized financial risk roles are not always paid the same. So, yes, the pay in India can already be solid, especially if you build quantitative strength and relevant specialization. Internationally, the numbers are stronger. In the United States, recent salary estimates for financial risk analysts are around $111,000 per year on average. In the UK, the average estimate is around £56,000 per year, and those are healthy numbers. And they reflect the value of this profession in mature financial markets. So, financially, this can be a rewarding career. But like many serious careers, it rewards competence, not just enthusiasm. A student who says finance is cool will not automatically succeed here. A student who builds strong skills, finance, analysis, risk concepts, and quantitative reasoning can grow very well here. So now let us come to the emotional core of this career. A financial risk analyst is a person who helps institutions stay wise under uncertainty. That sounds simple, but it's powerful. When everybody is chasing growth, this professional asks about sustainability. When people see upside, this professional studies downside. When the institutions move fast, this professional helps them move carefully enough not to collapse. And that is why I find this career so meaningful. It's not a glamorous title in the social media sense, but it's a sharp, high value, future proof, intellectually respected role in the financial world. And for Gen Z or career aspirants, that matters. Because the world of work is changing fast. Institutions want people who can think, calculate, question, and protect value. They want professionals who can handle uncertainty, not just chase trends. And financial risk analysis sits exactly in that zone. So, if you're a student who enjoys finance but does not want a shallow path, if you like analysis, if you want seriousness, if you enjoy asking what can go wrong and how do we prepare, then this might be one of the smartest careers for you. So, let me close this with this thought. A financial risk analyst does not only work with fear, they work with preparedness. They do not only study danger, they help create stability. They do not only measure problems, they help organizations stay strong enough to survive them. And that is real value. And now, let me speak directly to the student or parent listening to this episode. If today's episode on financial risk analyst opened your mind to a career you had never seriously considered before, imagine how many more right fit careers may still be hidden from you. The truth is, the right career is not found by guesswork, pressure, or random opinions from people around you. It's found through clarity. If you're confused about your career path, your subject choices, your college roadmap, or your future direction, connect with me for my career counseling program. I help students understand their strengths, identify careers that truly fit them, and move forward with confidence. So, whether you're interested in finance, risk management, economics, quantitative careers, or study abroad, I can help you decode what is right for you. Message me today and let us find the career path that's truly meant for you. Your dream career was never lost, it was simply unread. So let's decode it together. This is Kapeel Gupta, and you're listening to the Kapeel Gupta Career PodShow. So stay curious, stay sharp, and remember, in a world full of uncertainty, people who understand risk and never out of value.